I am going to take you through this pattern tonight, which is on the log scale, and it's the whole of the XRP trading, and it's on Bitstamp, up to date. And I'm going to look at the pattern and the repetition of the pattern, and then I'm going to do the same with Bitcoin and Ethereum. I haven't mapped them out this way previously, so I'm going to look to do the same on them, but I'm going to talk you through XRP first. So, as I was saying to you, there's a clear pattern that goes on all the time, and it's repeating itself over and over and over. And it's like that Thai saying, same but different. Is you'll see the pattern playing out, and you'll see the same touch points, but yet every pattern is a little unique. It's like every snowflake. They're all snowflakes, but they're all a little unique in their own way. Yeah. Most if not all the big trades that I've gone in on are from pattern reading, where I use the TA to line it up, but I read the pattern to know it's coming. Because it's just so it's so repeatable. The challenge with reading the patterns is getting the position right. Is reading the pattern and knowing you're reading it at the right time. So you got to cross reference along the way. Yeah. So here is, and I would have shown you. Where is it? I was talking you through another one last week, and we were talking about the 3 peaks on the dome, and the 3 peaks on the dome is really the arc pattern. It's the same thing. We were talking through this one last week, if you remember. Yeah. So I followed on. I've done this one to clarify, and the thing I'm looking to clarify is, again, I'm going to go to bring Bitcoin in here for a moment, is from last week's conversation, is where we are in this pattern. Okay, so remember, and Bitcoin has it the most clearest. Here's the 3 peaks, then here's the dome. It's a head and shoulders, really, head and shoulders, and then you've got these 3 bottoms here, and then you've got the final lift, and then you've got the drop, and after that you have the parabolic pump. So you've got the dump before the pump, the clear out, and then off it goes. Yeah. And did the same here, and it's quite possible if we go into it here, we'll find the same thing here, be at an angle like this. So you can see the 3 peaks. Let's say the 3 peaks are up here. Is the dome is here. Here's the dome. Then the three bottoms here, and then it takes off. It goes up one last time, and then it comes down. And you can see where you've got support here, you've got resistance here. Is it comes down, 3 bottoms, up it comes one last time, and then it comes down. Now this might look small. Remember, this is on the log scale, so from the top to the bottom here is 48%. 48%, yeah. Here, $62. Okay, and again you can see that the three bottoms, and then up it comes, touches it one last time. Look, there's support here, here's resistance, and then down it comes. So now here we have the 3 peaks again, and the dome. Now the dome on this one, again, you can see it as a head and shoulders as well. It's much bigger. And then there's the 3 bottoms. Now this is the challenge. This is what I'm trying to figure out. And today may be a fake out, and it's a very good one if it is. But the challenge is, and this is why I'm doing the other chart. So I'm setting you up in the sense of I'm explaining why I went and did the other chart to see if I can get more clarity. Yeah. So you can see 1, 2, 3, and look, this one lands short, and the previous one does as well. 1, 2. Now the challenge is this 3 where it lands short, and then it goes up one last time before it comes down, or is it 1, 2, 3, and then it comes up one last time before it comes down? Now why is this big, and then this isn't so big? Even if it goes in there, it's not so big. Well, remember, they look similar, but they're also different. Look at the size of this. Look at the size of that. Now look at the dome here, really small. The dome here is really big. Still a dome though. So same pattern, but the sizes are different. You see the way this is more level, and this is rising. So this is level. So for this final lift to come up here, it's got further to travel and then come down. The one down here is the same, but this one is much bigger. And then this is traveling up where this goes sideways. So the fact is that here's this resistance line that it needs to touch one more time like it did previously. And the question is this it? Have we already done the 1, 2, and the one that falls short, up for the final, and then down? So now part of the potential of maybe this is what's going on with the moving averages. And let me pull them in Bitcoin. Let me pull them in Bitcoin so I can just show you. Yeah. There we go. So now on this is the 20 EMA, this is the 55 EMA, yeah? On the weekly is we just had a death cross where the 20 has come down through the weekly, through the 55. So death cross signifies a big drop. So big correction, okay? So you can't ignore that, and that happened this morning, the turn of the day yesterday, yeah, or today, is when we go to the daily, is if it continues tomorrow, or possibly the next day, possibly tomorrow, or the next day, is you get a death cross on the daily. Now there was already a cross up, and this indicates that it's actually going for a drop, because it gives a little lift here, it crosses down, and it does a swan dive, yeah. So these are the type of drops that you can get when it crosses. Now the angle of this, as you can see, look at the angle of this. It went for a peak, and then it came down like this. So here's another example of it. Is a smaller example. Look, it crosses up it comes, you know, it comes down, and then it does a drop. So the weekly has crossed, and again the week is 7 days. So once it crosses over, you don't necessarily get an immediate response. But when the daily crosses over, well then that's going to be more immediate. That you get that response that day or the next day, depending on how. Like if it just crosses over the lip of it, it might take the next day before you really see it. Yeah. Now you have to take into account that this is also part of the drop. This is part of the drop. So, and this will be a continuation of it. So this is all, you can't ignore this. And then on the weekly there's been very few times, and this is on Bitstamp now, and I'm going to put it on the log scale. There's been very few times that the 20 crosses over the 55 on the weekly. Okay, so let's just have a quick look at the times when it has done it. Now this is all the way back in 2011, yeah? So here they are here. Here's a crossover here. And again, because this is already peaked, this crossover here completes the bear market. This is the bottom of the bear market. So here's the peak of the 2013 bull run. Here's the bear market coming down. And here's the bottom of the bear market. So this crossing over completes the bottom of the bear market, but the bear market still drags on, but this is the lowest point. Okay, and then look at when it crosses over again, you could nearly say is from here is, look, there's that last lift. You get a drop, and then up it comes, and then from here it continues up. So now look at the crossover here, and then again, look, here's that parabolic run for the peak of 2017. So again, each one of these is a bull run, bear run, there's a cross, here's the, initiates the bull run, here's the retrace, here's the bear, look, it crosses again, and look, it brings us down to the lowest point in the bear market after 2017-18 peak. Okay, so you can see the drop. So now, again, swings up, here's a lift, here's the lift up, here is it doesn't break it here, but look, it comes right onto the line, but you get a drop down. And again, here's one of these examples of you get a lift up, the final lift up. Look, here's the support, here's the resistance. Is you get the final lift up, you get the clear out, the drop before the pump, the dump before the pump, that sets up a parabolic run. So you'll see it all along. There it is there. I'm sure it's down there as well, yeah. So now, here we are, back in the same situation. Now what I believe here, I said this last week, is here's the 2017-18 bull run, here's the bear run, and the correction is it flows along here. Here's the dump before the pump. I think this is the first wave of the bull run. It has far more to go, but because the pattern is getting stretched out, because look at the angle, look at the angle, so you can see sharper and shorter, longer and lower, longer again and lower again. It's getting stretched out. So there's a lot more to go in this one, but you can see it's getting stretched out, which means that it has more corrections in it. So it having a correction here before it goes in another parabolic pump would make a bit of sense. And we haven't had one of those big drops in a while. So now, here we are here. And it's crossed over today. Okay. So now this is the Elliott wave from here, 3, 4, 5. If we put the fib on it, Okay, there's the 05 at 16. I don't think it's going to go that far. Let me do it this way. From the bottom to the top. I'm just curious what the fib show here, yeah? So here's the 786. If it breaks the 786, we're back to the 702 at 29. And again, that's a very strong support line. If it wants to go all the way into the golden pocket, there's 25.3, and then the 618 is 22.9, and 05 is 16. Okay, so remember 29, and then I'm also going to show you the previous high of the previous bull run. So 19,700, yeah? So the target seems to be 29 or 19, something like that. Okay, so now you understand why I'm doing what I'm doing. And XRP tells its own similar story. So now I've done this for XRP, and then I'm going to do them for Bitcoin, and I want you to pay attention to how I'm doing it, yeah? So here's all the chart of XRP, yeah? And again, you can see the simple triangle. You can see the triangle. Very simple, yeah? You can see the support line here and the support line here. They all have two. You've got the deeper one, and then you got this one here. Okay? So you can see all the support along here. And then you can see this one here. See the support here, resistance here, a little bit of support, resistance, a little bit of resistance and support. So 2 lines, okay? And then you can also see the channel. Support, resistance, support, resistance. So you can see this channel. So now watch this, is the touches. I'm going to do the touches from here, this line here, to there. 1, 2, how many times it goes? 1, 2, and then down again 3. So I'm ignoring this because all this is 1, 2, 3. Okay, back up again, 4, 5. Okay, 6. Doesn't matter that it's gone down here. 6 is back up to this line again. 6, 7, down one last time, and 8 is up. Okay, and there's the triple top. Here's the dome. Here's the dome here, and then here's again, it's a little bit messier, but here's the triple bottom here. Okay, and look, you've got your support here, you've got your resistance here, you've got the lift one more time up, and then it comes down, and this can be a bit sneaky, but you got this all the way down here. Now this here, well, I've already measured it. From the top to the bottom here is 68.36%. This is XRP. A 68.36% drop from here to there. Okay. So again, all measured out. All I've done is measured out a triangle and a channel. And then this red line, again, is another support, resistance, and look, it marks this here. This is why I put that red line in here, yeah? So you can see that this red line is relevant all the way through. So here we are here. That's the peak of 2013, and then here's the correction. Here's the bottom of that bear market, no, sorry, tell a lie. Here's the bottom of that bear market down here. Okay, this nearly got to it again, and then off we go. So now again, it's the same thing. I've put in an extra line here because I can see it. But let's talk it through. So now the line I'm going to follow here, I did from here to from here to there. This one I'm going to do from I'm going to do this line here and that line. Okay, 1, 2, 3, 4, 5, 6, 7, and 8. Up we go. So 1, 2, 3, 4, 5. Either one of these 5, because there's 6. There's that final dump, 7, and then up we go. Okay. So now here's the same red line. Here's the support. Here's the resistance. And look, where's the? See, this is a little bit more challenging than Bitcoin. Bitcoin is not as clear. The 3 peaks. Okay, even though they're bunched together, the dome is easy part that comes down is the triple bottom here seems to be I don't know, 1, 2, 3. You know, it's the 1, 2, 3, 1, 2, 3. Somewhere within this, there's definitely the triple bottom, and there's more options than 3, but you can see it's generally there. 1, 2, and let's say that's 3, and then look, it comes up one last time. So 1, 2, and then 3, because that's the bottom there, and then up it comes one last time, and then down it comes. 67.46% drop. Super similar. And then the whole, remember, while the same but different. So while they look familiar, you know, there's differences in them, but still the touches are the same. The triangles are the same. The pattern's the same. So now here we are here. Bring us up to date. So this one isn't complete. So now the challenge is 2 red lines here, because I have 2 potentials. I forgot to mention this blue line here. This blue line is the divergence. The divergence here. So for the final drop there's a line here, look, and there's a line there. So you can see that once across this line, it was heading down. Okay, so divergence was crossed. You got a channel up, it breaks, it's breaking, and down we come. So clear divergence. Same here, look, follow that line. I know I'm breaking it a little bit there, but that's okay. Is look, clear divergence, and then down it comes. So now here is the touches. I'm going to use the touches from this line here. This line here and this line here. Now the reason why I'm not using this line is because there's more touches on it, and it's a thinner line, yeah? So it's a clear channel, but these are where the touches are. So 1, 2, 3, 4, 5, 6, and then 7, and then 8. 1, 2, 3, and again, any one of these, they're all at the bottom. 4, this is still 4 because it hasn't come down here again. 4, 5, 6, and then 7, and then up we go. Okay. Now notice that when you get this spill, it breaks this bottom line. It breaks this bottom line. Is also, there's 1, 2, 3 times. This is the 4th time. 1, only 2 on this one. And this one, we're on 1 drops, one break with so far. But my point is that it breaks the bottom line, yeah. So now the top of this is, you've got the 3 peaks, Here's the dome. Now, back to the same question. You can see that it's going up at an angle. So the triple bottom, 1, 2, 3. So now, this would indicate that there's a fourth to come. There's a fourth to come. So that's all okay. There's a fourth to come, and it looks like it's going to head back up to at least 91, 80, so 92. And look, there's the resistance, or maybe it's this one here. So you got the support, you got that final resistance there. So it could be 101. Strong chance it could be 101 as well. Okay. With the Bitcoin here, this is Bitcoin again. 1, 2. If this is 3, is one last trip up to 51. And then down it comes. And remember with Bitcoin, one of them was 49 and the other one was 60. 49 and 60. So now, if we measure from here, 41 is 29,800. 61 is 19,869. So strong support here. So 41 to here, 60 to there. And the previous two were 49 and 60. I can't see it breaking this, because if it breaks the previous bull run, it will be classically known as the bear market. People will say it's in the bear market. So that's if it goes to here. But if this is it, because again, same but different. If this is it, and we're already on the downturn, is dropping to 29 is only 38%. Dropping to 19 is 58%. Remember what I said, is that 1, 2, 3, final one, or 1, 2, or 3. Why could this be the final one? Is because the debt cross on the weekly and potentially the debt cross in the daily tomorrow. Now XRP is in a similar position. XRP, let me pull out one of my, there we go. XRP on the daily already had its debt cross 1, 2, 3, 4, 5, 6, 7, 8 days ago. But XRP on the weekly had its debt cross today, when it crossed over, when it turned over today, like Bitcoin. So the fact that they have, both of them are on having their weekly debt cross at the same time, the same day. So it can't be ignored. You just can't ignore something like this. Does that mean, oh, we're going to get the drop? Well, remember, it's a weekly, so you can have a strong reaction from it. You can have a pushback. You got the whole week. So what I mean by that is, I'm zooming in on this now, and we're back to the same question. 1, 2, 3. I think that's fairly obvious. 1, 2, 3. Okay. And it's coming up again. It's not level, it's coming up. So therefore, the peak, it doesn't have to travel that far. But still, the peak is still, retracing to the peak is still 92 or 101. So this little peak here doesn't look like it's that big final lift. And there's a lot of shorts here. A lot of people thinking this is going down. A lot of people shorting here. So if it went up to 101, it would wipe out an awful lot of shorts. So there's a really solid argument for that. There's a really solid argument for that. Is the difficulty I have with it is, again, here's the daily, Here's the 20 on the 55. This is looking very spilly. The daily is looking very spilly. Now this candle today was red and it's after going green, so there's a retrace at the moment. Is when I turn it to the weekly, you could have a bounce and it come up and it bounce off the 92, or it shoots up to the 101 and then comes back down, and you got a stronger, the weekly eventually applies pressure and pushes it down. It's a bit of a reach. It's a bit of a reach to get it up to the 101. It could bounce up to the 92 and then come down and wipe out all the shorts, all the shorts who have tight stop losses, and then go down and wipe out all the longs. Wipe out all the longs and wipe out all the long-term longs and do again a 60-odd% drop and turn around, and then it's off to the moon. Yeah. So you can see clearly where it is. Like it's there's no doubt where it is. It's just a matter of divining its next steps, but we know where it's going. So now there is one other scenario that it could do here. This is it, and it's heading down. So all these people in the shorts here, is a lot of people don't expect it to. It's hard to believe if you've never seen a 60-70% drop. It's hard to imagine them. So there's an awful lot of people can't imagine that type of drop unless you've been through one or two of them. They're hard to imagine, but they go and they go fast. They could happen in an hour. They could happen in 2 hours. They could take days, but they can happen really, really fast. Doesn't give people much time to get in unless they've got their trades already in. Yeah. So let me just show you this. Measure it out. Yeah. I think from here down to there, down to 29 is 63. 63%. I think we did it from here. There's 68%. Down to 29. And again, 29 is a common number that a lot of people talk about. 29, 30, 29, 28. Now look at the divergence. So what are one of the signals that we're looking for? Is if it is going to go, we need to see it break this line. We need to see it break 70 cent or so. If it clearly starts to break 70 cent, I think it's a good clear sign that we're heading down. Yeah. So I'm watching out for this. I have a short at 77.50, and I have my liquidation up at 114, nearly 115, all the way up here, to allow for this space. If it wants to go up here, I'll DCA in. And I have another set of shorts from 92 all the way up to 111. So I have another set of small shorts, and incrementally I'm loading them in every 5 points. So 91 and a half, 96 and a half, 100.5, 105.5, and 111.5. I've got all those shorts in. So if it wants to go up there and do like a flash pump, like a fake out, I'll happily catch that, and then down it goes. So I'm set that way, and they're all small trades, but I'm DCAing, and it'll accumulate. If it doesn't, I still have my short here. So I'm looking to see the next day or two, is it going to break this, or are we going to have the lift up? It's hard to tell. I would think it's going for a final lift, but for the daily is spilly, and then equally is the weekly has just crossed over. So now part of what I'm looking at with the weekly is, well, maybe I'll do it here. I'll do it here. What I'm looking at with the weekly is one of the things you look for, and you'll see it here, is you can see here's the 20 turns, and there's already price action above. So you got to look at how much price action is above, because it lets you know how much it can go. And if there's a lot of price action, like look at here, there's so much price action coming down here that by the time it actually lands back on the 20, look at it, it's half of it, oh, well, more than half it's here, and look, and then there's that drop. But this one here is, look, there's less of it there, so it's a bigger drop there. So now what does this tell you here? If there's a small amount here, it sort of indicates that there's a lot more that can go below. If you understand what I mean. It's clearly indicating that. So now, this is a term. This is a term. Is all this needs to do is on the turn of a day, do that. It just needs to do that. Boom. And off it goes. And the fact that it's crossed over to 55 is just really hard to ignore. The market makers can absolutely force it up and then just let it drop. So I'm set for this, and then I'm set for that. Okay? So anybody, any questions? Anybody, any
Hi, Rob.
hi Anil, how you doing?
Yeah, I'm good, thanks. Yeah, listen to what you've said there, and over the last week, I'm in this long, and I'm just wondering if I should just come out of it. I don't want to, because but my entry is around. Let's have a quick look. I think it's just about 80, 0.80.
Okay.
And I wonder if it's best to exit it, just because I don't want to, get liquidated or get a bigger loss.
Yeah. Good question. I come out of a trade because I didn't want to risk a bigger loss there the other day as well. Let me show you the 15 minute arc. Yeah. So here's the 15-minute arc, and this is one of the things I'm. Well, first off, O'Neill, I wouldn't be surprised if it does a pump up before it drops, but I don't know. It's as tricky as hell. But here's the 15 minute. Yeah. So here we are down the third spike. Now this is what I'm not sure about, because of this long way down. Is the
So sorry, have you changed your chart? I'm only seeing the weekly one here.
Oh, my apologies. I didn't pull it over into, the way when I didn't pull it over. Sorry. I did. I was looking. There we go. So here's my 15-minute arc, yeah. And when I put the fib on this from here to the top here, is I was expecting, and still possibly expecting, Mountain Peak to come higher, and especially because the volume's back in, is Mountain Peak to come up somewhere around resistance. And you can see there's this support or resistance line here at about 84, 89. The Fibs is, here's the golden pocket from 82.3. So anything from 82.3 to 85. I was thinking Mountain Peak would get up to that, yeah? And it still may do. So that this lift here this could be a double top, and we got a smaller Mountain Peak, and then this could be Mountain Peak, or this could be double top. We're coming for a retrace. Here's first, rather than this being first drop, this is first drop, and we're coming up for Mountain Peak. Okay, so if the the debt cross didn't happen on Bitcoin and on XRP today, and Bitcoin looking like it's going to have a debt cross on the daily tomorrow, or for sure the next day, is, O'Neill, I would say we're heading up for Mountain Peak, back up to somewhere in the 80s. So, and that this is double top, and we've got this journey to go first. So I'm waiting to see what this is. I'm waiting to see what this is going to do. So I'm in my short from 77.50. So I'm in a situation where when this retraces here, I'm sort of asking, do I take my profit and let it go up and catch a better short position here, or do I hold it here, and if this is Mountain Peak, is one of the potentials is this Mountain Peak third drop. So you got your first lift, is now you get your second lift, and then down it goes. So now the question is that, are we going to get a smaller movement here but a quicker one? So tomorrow down we go, possibly, or is it going to get that lift where, if you look at the peak here, here's 90, here's 90, 91, 85, here's 92, is Mountain Peak could push it really close, go right up here, and it's that final lift before the drop, and then a little bounce here, and then down we go. The straight answer is, O'Neill, I don't know. Is that,
no, that's fair. Yeah, I understand that. It's
yeah, I'm waiting.
I mean, my liquidation is 0.54, but
your
I
liquidation,
don't look close to that.
your liquidation's 50.4. Yeah, like there is
54 cents.
54.
54 cents, yeah, for example.
Yeah, there is an argument. There is an argument to say that the drop might only go to 49 or somewhere in the 40s. But do you know what I mean? Even if it's low money, it's just a big drop. It's a big drop.
Yeah, of course. And for me, it's about the experience of being in a trade and getting it right.
Yeah, absolutely.
Yeah, that's for me this time.
Absolutely, yeah. Well, I said it to you the other day. Is one of the lessons that is learn when to take your loss. Learn when to, like, I hate taking losses, but I'm accepting them more and more, that when I'm not in the best position and it could go either way, is uh, I will take my loss. Now let me qualify that. Is, if we're in the middle of an arc and we weren't on this major breakout, I would play the DCA up and down. So let me just qualify that. Is, I'm bringing in the 4 hour. I'm bringing in the 4 hour, and I'm bringing in the weekly arcs. Yeah. So now here's the 4 hour. So we're breaking out of the 15 minute. We're breaking out of the hour. We're breaking out of the 4 hour. We're breaking out of the daily, and then here is the weekly, which has been going on for 13 months. And it's the same. Look, the three peaks, the dome, the triple bottom, and here we are to final. Have we got one more final peak, and down we go, or was this it? And we're heading down. So 1, 2, 3, final lift, and then down. Or if we got one more in us. Is the reason why I'm willing to take my loss now is because it is so tricky here. Is, if I was in the same situation in this arc here, O'Neill, I would play the DCA game. If I was here, I would play the DCA game, because I know the limits. You understand what I'm saying?
Yeah.
I know the limits. So therefore I can I can trade those, DCA those limits, and I'm not afraid to do it. I'm afraid to do it here, even with a small amount, because again, I want to get the trade right. So I'm willing to take the loss and reposition, which is what I did. I took the loss and I repositioned, simply because we're at the end of all the arcs. All the arcs are resetting. So now this is going to be volatile. There's a bit of trickiness here, yeah. I know that doesn't give you a definitive answer, but what is the definitive answer? Is let's have a look. Is the question is, O'Neill, not the question. You don't want to get into a big DCA battle. You don't want that. That'd be just a nightmare, yeah. So how low does this need to go before it's clearly telling you I'm heading down and I'm going deep? Do you get what I'm trying to say?
Yeah.
And you go, okay, look, it's not going my way, so to speak. So with price action here, price action here, here's this divergence line. There is 71, say. Is if it starts breaking this line, 71, if it starts breaking this line proper, is I would tell you that, okay, look, it looks like it's going to head down and break through. So you don't want that battle. If anything, you come out and you're going a short. Is if you're in the position now 75, it's already got up to 76 and it's doing a bit of a retrace. You could wait a little longer to see after this retrace here, because here's this impulse. It came all the way down to this 618. Here's a small impulse and it's coming to its own correction here. The question is that when it does this, is it going to work down or is it going to go up? When you can clearly know or see which way this is going, I think you need to make your decision. Do you take the loss, or I'll wait and it's sure it's going up? Sure, it's going up. Sure, just let it go and let's see how far it wants to go. There you go. That's what I would do, O'Neill.
Yeah, I'm waiting.
Okay.
I agree what you said there.
Yeah, I think 71 is the 71. If it starts breaking 71, you see it doing it with a bit of gusto. Is I would go in. I would be thinking about going in on a short. Yeah.
Yeah. Well, I mean, it got down. When was it? It was
here. It got down to
11th. It went to 68.
Down here, yes. Yeah.
Yeah. That was the 11th of April, and I kind of wrote out that I said, okay, let's see if how low it goes, and then it went up, which was good for me.
Yeah, 79.93.
And here we are again. Yeah.
Here we are again. Yeah. Yeah. So if it wasn't for the debt crosses, I'd say this is double top, and we're heading for Mountain Peak. So the debt crosses are now. Maybe this is Mountain Peak. So I don't know. We'll know soon enough. Okay, so does everybody get what I'm doing with this one? Okay, so now you got to listen to the point I'm trying to make here, because it's really clear. Yeah, is when all your TA fails, so to speak, when all the indicators fail or they get very messy. It gets very messy here because there's so many of the moving averages mixing together that it gets very, very difficult to read the moving averages. There's another thing you can rely on, and that's previous price action, because it repeats itself so many times. It's repeating itself over and over and over. Same but different. So when you map out previous price action and you locate where you are now and you locate where it was and what's happened, it gives you really strong indications about what's going to happen. Like all these drops, I call these not because of I was doing my fibs or anything. I call these because of price action. My fibs helped me measure where they were going to go. But previous, look, you can see the previous pattern I was following, and I could see there's peaks, there's drops here. You know, so I played for position, and then I waited, and off it went and caught them. So it's the same thing here. Is on the bigger time frame, on the bigger moves, this is an excellent way to trade. Is look at the repeating pattern, and then map it out. So it would be good for you to start to practice going onto the log scale, getting the whole of price action on it, and then start to section it into, well, here's a parabolic pump, here's a consolidation phase, a pump, consolidation phase, pump, consolidation phase, and map out the behavior of it and localize it from where you are now. Find it in other parts of the chart and what's happened. Just as a discipline, it's really, really good. And it stops you getting caught with these feckers. Stops you getting caught with these feckers, yeah? Okay. So, just one more thing with XRP, yeah? When it does pump, XRP is a bit brutal. It likes to do retraces. So look at this here. Look at this beautiful pump. Amazing. And all the way back down here. Wiped everybody out who didn't take the profit. So you got to be careful with XRP that when it pumps, it does this type of thing. So you know you got to make sure and take your profits when you get a really good pump. Yeah, didn't do it so bad here. Although I think when you put it on the daily, let me just see. I think I saw it here on the daily. Yeah, I did. Look at that. Dirty. Look at this. Amazing. Woohoo! Amazing. And then you don't take your profit on the same day. Wiped everybody out. Broke so many hearts there. So you just got to be on, you got to be switched on. When you see it doing a pump, take your feckin' profits. Because on the same day, all the way back down here. So you just got to be super careful. It's quite possible it did this, came down here, and then went up there. Just wiping people out and wrecking everybody's head, yeah? But look, you can see this. So it did it there in this one. And then it did it on this one as well. It did it on this one as well, yeah? Now it did it over a week on this one rather than a day. So that's XRP. Now, amazing opportunity, because look, you can make a ton of money and profit here. You can make amazing profits here and then amazing profits there. Or you can make profit here, or you can lose it all there. Your heart is broken. So you just got to be careful with XRP, yeah? Okay, so now, how are we doing on time? Okay, so we did an hour there. Okay, so what's my conclusion here, just for now, before I start looking at Bitcoin, is so remember here, remember that line here. I think here it is, 90 and 92. On where is it? Ah, sorry guys, I was on the right chart but on the wrong timeline. So now we're here. Is XRP, are we going to take a trip up to 92 or 101 or anywhere in between before we head down? I hope you all clearly see that there is a dump before the pump. Bitcoin has it, they all have it, the dump before the pump. We haven't had the dump before the pump. You could say, well, maybe Roy, maybe that was the dump before the pump. No, it's not. It's not the dump before the pump. This is the final bit of the arc here, yeah. Is that we need to see the dump, a proper clear out before it pumps. Okay, so we need 1, 2, 3, 4, 5, 6, 7, and then 8. So the two before have had 7 and then 8. And then look, we haven't had it break below this. So there's a dump due. The question is that do we take another lift up before we come down? Okay, do we take another lift up before we come down, or have we already done the lift and we're coming down? Okay, now I was going to say something to you earlier on. The reason why it might just come down now is because of this. Is all the people in the shorts here, excellent. People make profit. What's down here is a load of big money has agreed a price. If you think about institutions buying it over the counter, or even off the exchanges, they have agreed the price down here. So the price gets brought down. It wipes out all the traders that have trades down here. It either forces them to close their trade or they get wiped out. And then down here there's a load of big money buying in. So they bring it down to that price, and then the big money ride it all the way up. Okay, so now if the traders are smart enough, they catch this as well. Okay, and then up they go, and look, the traders going along here, and then when do the traders get caught? They all get wiped out here. So you got to be careful that if you don't get caught here and you're making it here, is don't get caught here. So it's a rocky road, and again, it's designed to catch out the traders, and the big money don't care, because look, they've already bought in here, and they know that this is the bottom, so they don't care about all of this, and the big money will start selling off here, you know, and it'll be the retail that'll push it up to here, yeah. Big money's already sold and made massive profits by the time it gets to here. They don't wait to try and find the top. So that's the game. That's the game that's being played. So when you understand that, you'll understand that this for XRP, a 68% drop here, this is the time when it gets done. It's brutal, but it's only brutal for the small people or the people who don't know. So anyway, it's coming. So are we going up one more time before the drop, or we're going to drop? If we drop, great. The debt crosses are suggesting that it's coming pretty soon. It's coming pretty soon. Sometime this week. Unless there is a really solid push up here to the 101, and this line, and on Bitcoin as well, this line on the weekly gets pushed back up for a little longer, and it just goes sideways like this. I don't think that's going to happen. I'll tell you why, because it happened last week. It came down and it touched this line, and it nipped over, nearly nipped over a little bit, and then price action came up and pushed it away. Where now it's properly crossed at this time, and also you can see that there's a lift up, there's a drop down. Could there be a lift up here, a little breather here? Yeah, and then it's just a continuation down. There's lots for this to go, so it looks perfectly set up for the drop. So I can't see this going much higher than again 92, if it even gets there, and then push down. They're my own thoughts on it, yeah. And I've got my trading strategy in place. So you got to think about what you're going to do. So now I'm going to do the same thing for Bitcoin from the scratch. So you'll see what I'm doing from scratch. and I'll probably just get Bitcoin. Well, I'll tell you what, you want me to do Bitcoin or Ethereum? Most of you guys are trading Ethereum, aren't you?
Yeah, well, if you could do ETH, that'd be great.
Yeah, I'll do ETH. Bitcoin's easier, but I'll do ETH. I'll do ETH because I know you guys trade ETH more. So let me just put these Bitcoin ones back here. Okay, that's them there. Let me close that down and let me pull up ETH. Now, it's gonna. Now I've done a big ETH chart as well, so I'm going to pull that in and show you, because ETH has the same patterns. They're not as tidy. They're not as tidy. Let me just make sure I have the right one. Okay. Excuse me. There it is there. Okay. So here's the ETH chart. Okay. Now it's a different type of it's the one I was doing last week, yeah. Where I'm gonna do the bull flag chart now in a moment, yeah. So you can see ETH is doing a big cup and handle, yeah. Yeah, no, it's not as clear. XRP is definitely doing a big cup and handle. Yeah, this needs to come down. Okay, so now you can see the same pattern here and here. So the three peaks, the dome, and again this one is a bit messy, isn't so clear, yeah. The three peaks, the dome. There's the again. If I zoom into this is back in 2016. Yeah, this is the bull run for 2017. Yeah, the three bottoms are here, up for the final lift, and then the breakdown. Yeah, it's not as neat or as tidy. You can see the price action is a lot smaller. Yeah, but still, it's still there, and that was a 57% drop. Okay, and again, look, the dump for the pump, big clear out for the parabolic pump. Yeah, and I'd suggest you probably find it in there. You probably need to go into lower than the day to see it, but you probably see it there, and then look, the dump before the pump. Yeah. So now here's the peak of 2000 and January 18 for Ethereum, and again here's the correction. There's the bottom of it, and then look, it floats along, and then here is again the dome. Again, this is why is Ethereum not as clean and as tidy as Bitcoin or even XRP? Because Bitcoin does these long, see these long sideways, you know, and gradual. Look at this, you know, it just does that, and it lots of choppy, so it makes the overall pattern is still there, but it's never neat and tidy. It's never neat and tidy. It's never neat and tidy. So here's the three peaks. you know, and then look, rather than it having a nice distinct and then the dome is here. There's one, the peak of the dome. It's like the head and shoulders there, yeah. Then the three bottoms looks like this is it. 1, 2, 3. Now, because I'm familiar with it, I know what I'm looking for, I can see that. But it's so fecky, you know? So fecky. Look, it hits a bottom and then it comes back up. Here's the support. Here's that final resistance. And then it comes back up. Now this one, it broke clearly. It broke through all the way up to here. And then it came down. Again, the dump before the pump. So what was the last one? 57%? And there is 69.5%. Okay, massive clear out. And then there was that beautiful bull run. So this is the bottom of the bear market, and then this is where it starts to go. Everything from here starts to go up. Okay, and look at this meandering. So now here we are again, and again it's like the other coins is, look, here's the 3 peaks, and then look how big the dome is. Look at the dome. There's the dome. Okay, and then we're into the triple bottom. 1, 2, and this is the same question I have for Bitcoin. Is this 3 because it falls short, and then it goes for the final lift, and then we're heading down? Okay, or is it 1, 2, 3, and then we turn around and we get our lift? It comes up, and again, it looks like it's this. It looks like it's this. Is when you go any higher, I said, look, there's maybe potentially there. It could go up to 3,690, 3,690, maybe. But this looks so clean and tidy here. Like just the support, nearly with the resistance there, you know, and then look at this, come up here, it's come up here and it's touched it. So it looks like it's already done, and it's on the way down. That's what it looks like. Now, when you look at the debt crosses, there's the 20 and the 55. It's the same thing on the daily. Look, you've got the lift. Give it the lift so it can turn down, break through, and then go in a nice drop. And again, tomorrow or the next day, depending on how the angle of this, tomorrow or the next day, is this looks like it could go. Maybe 2 days, depends. But on the weekly is Ethereum is miles away. Well, when you zoom it like that, it doesn't look miles away. When you look at it like that, it does, yeah. But it's floating like this. Now XRP was floating like this, and what it did was it just one day it turned down, and then the next day it was wicking to go through. Then it got rejected a little bit, and then it came down. Now it's crossed it over. So it's not that far away from crossing over the debt cross on both, yeah. So is if it does come down, what did we say it was doing? 57% and 69%, wasn't it? Here to there, 56, 57%. Okay. So let's say this is the top. So from here, 52% is set. Well, here's the support line. This would be, when I do the triangles, this would be a baseline, yeah. So 39% is 2162, and you can see the support there. is the next support here is 52.5% at 1730. 60.5% is 1415, which brings it back to the previous all-time high of the 17-18 bull run. So again, it brings it to this, turns around and up it goes. Same with Bitcoin. Could go down to 19. So could Bitcoin come to 29, Ethereum could come to 1700, Bitcoin could go to 19, Ethereum could come down to 1450 or something. And then off it goes, yeah. So that's what we're looking at. Now as a channel, if you look at the channel here, you can see there's a nice tidy channel here. See that there? There's a nice tidy channel there. Is even if it went up and touched this here, remember this is the log scale, even if it went up and touched this here, that's 8,871. Now again, it's gonna break out of it, so you'd look for it to be breaking that. And look at this here, yeah. So this is 2016, 2018, 2021 so far. Now look how the sharp, how short and sharp. Not as short, not as longer, and not as sharp. And then look at the correction on this one. So you can see the waves are getting bigger. So this here is just the first leg of, I say, a second and a third leg. So anyway, so look at the channel here, the support and resistance here, the support and resistance here. Look, it broke through it here, it broke through it here. Is this time around, if it came down and it spiked through to this one here at 17, it would just breaking through it a little bit. If it broke through to 14, again, be breaking through it a bit more. And again, find its way back up onto it, and look at it following the 20 as it goes, yeah. So that's what it looks like it's going to do. Drop down to one of these guys, come back up onto the line, and then following the MAs or EMAs and the line, and up it goes. And then once you see it breaking off and taking off, it's proper taking off here. So, but again, long and meandering, it likes to do it. So now I'm going to copy this, clear out all this, and start with a freshly doing it, yeah. So just make a copy. Just for now. I better give this one a name. Okay. I got rid of the 55. Bring back the 55. Look at that. Damn it. I'll actually talk about this line for a sec as well. This is a super line. See that yellow curve? So they all have this as well. Is look at the curve here. This predictive curve. So all these touches here, the touch here, the touch here. This is the all-time high in 2018, and then look at the touches. Look at the touches here. Yeah. So again, you can expect it to follow this curve along the way. Yeah. And it's touching off it here, and then we get the parabolic pump. And if you leave this curve here, as it goes up, somewhere along the way, it'll come back down and touch it, and it will be a divergence. So you'll see a beautiful peak wherever the peak is, and then it'll come back down and touch it, and it'll be a divergence. It just gives you a good indication of how to follow the price action as it goes up. Yeah. Anyway, get rid of that now. Okay, so look, here we are now, and as much as it looks small, it's on the weekly, and this is all the way back to 2016. Yeah. So imagine each one of them is a bull flag. Yeah. I'll make this yellow. So this one here, and again the okay. Right. Is it here? This thing with ETH. So I think there. Again, I'm looking at see the touch points. I need enough touch points. There's those touch points here. Here again runs along here, here, here. So that's a good touch point there. Yeah. Okay. Let me bring this up a little bit. There. And again, the touch points here, here. Again, look at that for a nasty fake out. You can imagine everybody thinking, "Oh my God, it's breaking out! It's breaking out!" Everybody loads in and then just wipe them out, and then up it goes. Looks like the same happened here. Oh my God, it's breaking out! Oh no, it didn't. It dropped there. But it did actually come back. It did come back. It probably still came up and then came back and cleared out a lot of them and then went back up. Okay. So now this one here, again, we need to get our line. Now, again, just looking for enough touches. So I've got a resistance there, support, support, support here. If I go up too far, I go up to here, come too much out of it. Now, sometimes I just like to look at things just to see if I did this. Okay, because there is that. I'll leave that there for now. Okay, so just out of curiosity, is there's one touch here, 2, 3, 4. Now, you can't treat them exactly the same. I did this with XRP because there was a clear value in doing that, because you could see the support and the resistance. Where here, a little bit of support, resistance, support, support. Is if I did the same thing from here, is it worth doing? Is it worth doing? Is 1, 2, 3, 4, 5. I leave it in, but I'll actually use this line here. 1, 2, 3, 4, and up it went. Yeah. Do we have a channel line here? Can we see a clear? Is there a clear channel? Again, I think this one might be like a wedge, a bit of a wedge. So like a bull pennant there. I think that's it. There we go. There's that wedge there. Because look, you can see the resistance, support, support, and then support. Okay, so you can see that there as well, yeah. Now this one, again, a second line, putting it in. Oh, looks like I might have clicked right to it first. Sometimes I think this software is intuitive, because every time you clone a line, sometimes it just goes. Actually, often it goes right to where it should go. So look, support, 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 resistance, support, resistance, support, and support. So you can see there's a second line here, yeah. And now the channel, and again that looks, excuse me, that looks very, it's too thin. I can see this here like this. And again, I think we're back to a pennant. It looks resistance, 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 a little bit of support, resistance, support, resistance, support, support, and support. So there we go. 1, 2, 3, 4, 5, 6, 7, and up we go. We got it there. 1, 2, 3, 4, 5, 6, 7, and up we go. 8 is again here. Don't think we got it so much. Is 1, 2, 3, 4, 5, 6. Only 6 there. Okay. And here. That's distracting me a little bit. Equally, I don't want to be trying too hard either. Again, what I'm looking for is, okay. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Okay. Okay. And this, as it stands, this line here is at 2042. Okay. So that looks fairly reasonable. And one of the things that's standing out for me is look how it comes to the end here. Now look how sharp this one is. I know it can stretch out like that, yeah, but you can see there's a lower price action here, and you got this here, and then it comes down. Where this one, but actually it's lower again, but you got a height, and you got a couple of more touches. See, one touch here, but look, lots of lovely touches there, makes it nice and neat. One touch here, another touch there, you know, and then this touch to confirm it, yeah. So I would suggest on this one, because again, I'm looking at this being really long. I'm looking at this being really, really long, and I don't think that's the case. I think that most likely we are more like this. Something like that there. And again, so if I stretch it out this way, is if you look at this here, there's them there, and it could fit in very nicely with that there. We're going to try and get it to there. That's too much. There. I think something like that. There we go. Okay. And I think, do we have a second line here? Again, I think it's, there we go. Resistance, support, support, nearly support, support here, resistance here, support here, support here. Look at the 55 bouncing along it, so I think that's an obvious one. Okay. And again, it makes, look at this, makes a wedge. Makes a wedge, dependent. There we go. Down here, one last drop. You know, maybe even a spike through. Up it comes. So, one. What did I do now? Did I ruin this? Did I ruin it by? Did I ruin it by? I've lost these touches. When I had it like this, it was 1, 2, 3, 4, 5, 6, 7. Up it goes. Okay. Yeah, this is frustrating. Not too frustrating though. I think I still think, as much as I've taken the line out here, is it does make sense. I think this makes sense. And then here's the pennant. Okay. Okay. So, has anybody any questions? Has anyone?
Thank you, and I'm taking off. Thank you, Roy.
You're very welcome, Michael. I'm sure that was over an hour. Cheers. I'll post this. I'll post this with the link so people can copy it. Yeah. So look at the same pattern, and then the dump before the pump, and you can map it out very simply with a triangle and a wedge, a bull pennant. Yeah, a triangle, and again a bull pennant, a wedge, and triangle, and again pennant, wedge. Okay, they're all following the same pattern. So now you just need to decide is look at Ethereum here is we didn't put in the red line. Let's put in the red line. The red line. We'll do this one first. Remember the red line where the support. So I think the natural point. The natural point would be around here. And look, there's the final lift here. Our final resistance here. So support, resistance, support. Up here it comes. The lift. Sorry, the resistance, and then the triple peak, the dome. 3 steps down. And again, I'm doing this nearly from memory. It's very messy. And then the final lift up. The final lift up didn't make it to here, and then down it comes. Okay. Here. And the final lift is if you did it here, there's very little support there. Resistance, support, resistance, back up again one last time to touch off it, and then down it comes. So that's it there. It's actually fairly straightforward in this one. On this one is that final lift here didn't make it to that resistance point here, to that resistance line, and then down it went. Okay, where here is, this is the challenge with it. This seems to be the natural point of it, yeah. So resistance, support and resistance, support here, and again there's a touch. Now with this one here is, this seems to be the 3 peaks. I'll put it on the daily. It's on the weekly at the moment. The 3 peaks, and then the dome here. You can see it more now. You see the dome here, the dome, and then we've got the 1, 2, 3, and then the final lift. On the daily, it's clearer. And again, the question is this the drop down? And if it's not and it's coming back up, it just looks like it's going to come back up to 3,550 or so. Yeah, maybe it really wants to push up to 4,000 up to here. That'd be, I don't know, could be. If it was doing that final lift, or to be honest, it looks like the final lift is already in. 1, 2, 3, final lift, and then down. So Bitcoin and Ethereum look like they have the triple bottom, and then the final lift is in, and it's in the correction. Is XRP isn't so clear on the final lift. But XRP could spike up in a day and do it. it could go up to 92 in an hour and do it. That's the thing, yeah. You just got to be ready for it. So now I've got to do the measure again just to double check. And again, you'll see I'm repeating and going over it. Is whether you're here or not, this is what I would be doing. I'm double checking, I'm triple checking, I'm making sure I'm going through it. I'm going through all the same procedures, and then I'll go through them a second time and a third time. And the more times you do it, the better. So you might think I'm just repeating myself and you're going, Jesus, Roy, I heard this before. But yeah, this is what you need to do. Especially when you really want to get it into your head. It's like learning anything. You got to repeat it over and over. So there's 5750. $69.50. Okay. And again, let's say this is the top. Is to the bottom of this is 43 and it's 2030. 59.50 is 1450. 69 is 1087, 1100. Okay, now remember, we don't want to break the previous all-time high. We don't want to do that, and we know it's not the end. We know it's not a bull market, so we know that's not going to break that. Or to be honest, even if it does, it's not. Or sorry, the bear market. It's not a bear market. Is from here to here happens to be 60%. Okay. Yeah, that's it. Anybody, any questions? Anybody, any thoughts? So all the procedures I did with XRP, I did with Ethereum here. I do the same procedures with Bitcoin, and they're going to give me something similar. Now you can see that Ethereum is harder to read it, but it's still there. Bitcoin is clearer to read. XRP is somewhere in the middle. But the same procedure is same but different. So this is the last thing I'm going to say, is we haven't had our dump for our pump, and it's due. And if you look, there's the 3 steps. 1, 2, 3. 1, 2, 3. And if this isn't it, well then this is going to be it. And we could have one last final lift up. And up to 3,550. If it wanted to be, give a bit more volume, catch people out, is there's another point at 3,850. 3,850. Yeah, but 3,850, 3,39. If it really wanted to push up. But remember, is one of the differences. Actually, tell a lie. Remember on Bitcoin, these were nice and level, where on this one it's descending. On this one it's descending. it's in, yeah. I'm not zooming into, it's there, descending, where this one, it's ascending. Okay. So I would suggest that if you're putting in trades, again, small amounts to get position. Now I'm not used to trading ETH, but I'll give you targets. If it's coming back up one final time, is 3,550. If it really wants to push it, is 3,850, 3,9, yeah. Is before it does the dump. It may do 3,557. I really struggle to see it coming to here. I'm mindful of how much this one, although it was down deeper, so I had lots of space to move. This one is up higher, like it's ascending, so yeah. Anyway, so I think this is it. I think this would be the limit. So a question I'd have for you is that if you went in on a short now at 3,053, is what price would you have to go in at to allow yourself to have a liquidation up to 4,000? If you went in at 3,000, what does it take to have liquidation at 4,000? That might be way too much of a stretch. And dollar costing in. Now I'm talking about small amounts here, yeah, to get your position. Is if it was me, is I would be putting some shorts in from around here. A couple of shorts in just to catch it if it wants to come up, and on the way down we go. Is with here. I'd really have to see more of the price action to have a better idea about where this is. I think if I pull in one of my other ETH charts for a sec, yeah. I'm going to finish pretty soon as well, yeah, because I know I'm going on and on and on. So let me just do this. Okay. Okay. This is what I thought was my 15-minute, but it's actually an hour. It points out it's an hour chart, yeah. But look, here's a wave. Is what could happen here is a second wave comes in, wants to come up and do mountain peak, and it could come up as high as again there's the 3.4, the 3.5, comes up, does a mountain peak, and then comes down, and then a little lift, and then down it goes. It could do that. This looks like it's bottomed out, and this looks like it might be first drop, and then it's heading on the way up to mountain peak. And that's what it looks like. So one wave, two waves, and then a small wave, and then down it goes. That would fit in with this chart. So it looks like there is a long. I'll actually put the fibs on it proper, yeah. I'll put the fibs on it proper just to see. So I'm gonna do this one here first. I'm gonna go from the top to the bottom. down here actually. And then look at this. Look at this. From here all the way up to here, all the way back down to the 618. Right to the tip of it. Okay, so there we go. So there's the correction of that there. So now the correction of this one is we'll just do it the opposite way. Put the fib here from the bottom to the top. Again, we have a look at the golden pocket. So look, the golden pocket again already meets the support and resistance line there. Look right on it, 618. So potentially Mountain Peak is going to come up and do 3-3. But again, it could be eager. And remember that line that we had. Remember that line that we had here. So 3557 is this is actually Mountain Peak of the 1 hour. So it may not come up to the tip of this again, but it could come up and do the 702 or the 786. So 34, 3350, something like that. So maybe between 3.3 and 3.4. 3.3 and 3.4 is Mountain Peak. So there's a long there, and I would suggest that it would be a good opportunity to also get a short, and possibly a short take us all the way down. So this could find ourselves all the way back up, and then look at this line here. It's not interesting. Here, let me do this. If I take this here, copy it, superimpose it here. Okay, so there it is there. It's much bigger. Okay, this is not just this; it's the whole thing. Okay. All the way back to November. This is not 1 hour. Jesus, what am I like? This is not a 1 hour. This is a 4 hour. Okay, so this is already hit through a spike here. This is already Mountain Peak on the 4 hour. Jesus, what am I like? So now this is coming down. Okay. Sorry guys, I have to completely correct myself here. Jeez, I'm glad I did this. Is first spike, second spike, third spike. Double top, first drop, Mountain Peak. Now this may be the final drop. 3, 4, 5. So there may be a final lift to this, which would take it up to Mountain Peak to here. Which now I'm saying that look, this is resistance peak here, and also there's a resistance line here. It could go to 3881 here as a 1, 2, 0, 1, 2, 3, 4, and then 5. So there could be a Mountain Peak to here if I wanted to, and that would give it that final lift, and then down it comes to third spike. You get a little lift here, and then down it goes, and it breaks down. It does the spill, yeah. Okay, or this is Mountain Peak. It's already in, and that we're heading down for third drop. We've got 1, we've got 2. And then we got 3. So if this wants to come down again, do a third drop here. Then you get a lift, final lift. Look, it'd be natural to come up here, and then a drop, and then down it comes. Okay, so now I think the decider is what this does. If this drops down another level, then we're into third drop. You get a final lift here, and then it spills and down it comes. Okay, I actually think this might be Mountain Peak. Okay. Okay. Fascinating. Anybody, any questions? Okay. I should really look at my ETH charts more often. Because look, everything I just said, here it is. I already have it mapped out. This is my 4 hour. I already had it mapped out. What am I like? Okay. So this looks like Mountain Peak. We're heading down for maybe this was third drop here. Let's do the fibs on it, yeah. Again, I'm measuring from here to there. I'm going to go down from top to bottom to here. Okay, it's after coming down to the 0.5, and again that's possible. We've got the resistance peak, dead cat bounce, first drop, second drop. There's definitely a third drop due. And again, if we bring it down and it goes to the 618, 2793, might even want to go to the 702. Maybe you wants to come to the 786. You get a nice drop on it. Then that would be third drop. And it looks like we'll have another little lift and then down. There we go. I think that's it. I think that might be it. Okay. Okay. Has anybody any questions?
Roy, do you mind sharing your 4 hour arcs for ETH? I know you've shared the
I will, yes. Yeah. I will.
Charts for XRP, because I do map the arcs out myself, but it's good to cross-validate.
Yeah, absolutely. Yeah, yeah. What I'll do is I'll post this one, the new one I just did here. I'll post this with the link. I'll take a picture and I'll post it, and then immediately after that, I'll do it after this session. I'll post the 4 hour as well. Yeah.
Yeah. Cheers.
And yeah, that's it. Yeah, you're very welcome, Neil. Yeah. I have a look at them. I think the more you look at them, when you get used to looking at this scale, it becomes very self-explanatory. And one of the things it does is it takes a lot of the noise out. It takes a lot of the noise out. Because look what I did there. As much as I was saying this is originally this is a 15, then I said an hour, and it was all the time it was the 4 hour. But look at how I mapped all this out, and then when you take the 4 hour, the confluence is what I'm trying to say, yeah, is when you take the 4 hour and you put the 4 hour in it, it maps out, it's already mapping out the arc, and it's pretty much telling us what's going to happen. It's pretty much telling us what's going to happen. Super duper. Okay, guys, if you don't have any more questions, thank you very much. A super session, and again, you can see my own. I'm honest about what I'm doing. I'm talking it through as I do it. If I make a mistake, I make a mistake. And if I make a mistake, I correct a mistake. That's all you can do. Yeah, thank you very much. Enjoy the rest of your day, the rest of your evening. Yeah.
Cheers, Roy.
All right. Cheers. Bye bye.
Yeah, cheers, Roy.